What is consignment? It is an agreement between the consignor and the consignee. Consignor for sale of goods to the customer on behalf of commission. It is an extra commission allowed by the consignor to the consignee. The balance will be sent by check or draft by consignee to consignor. Hello my dear students, I am Dr. B.S. Subramania, called by name Dr. B.S.S., Professor in Commerce and Management, Vidhyaashram First Aid College at Temple of Excellence, MYSURU. In this session, I am going to hand Advanced Financial Accounting, second semester Unit 4, Session 1 in favor of Accounting for Consignment Transaction. So, what's the chapter name? Accounting for Consignment Transaction. So I am going to explain what is consignment, who are the parties are, how to do in this session. So just a theory, what do you mean by consignment? Who are the parties are there? So who sends the goods, who receives the goods, all we are going to explain. So what is actually consignment? In consignment, we have got two parties. One is called consignor. Another is called consignee. Who are the two parties are? One is the consignor, another is the consignee. Consignor is the owner. Consignee is the agent. So, consignor is the owner, consignee is the agent. So, what's the agreement that takes place between the consignor and the consignee? We called as consignment. So, what is consignment? It is an agreement between the consignor and the consignee. Consignee will sell the goods on behalf of the consignor at the risk of the consignor for a compensation is called commission. Who are the two parties are? One is the consignor, is the owner. Another is the consignee, is the agent. So consignor will send the goods to consignee. Consignee will sell the goods higher price than the cost price on behalf of the consignor at the risk of the consignor for a compensation is called commission. So, who sends the goods? Consignor. To whom? To agent, consignee. So, who are the sending goods are? The consignor and the consignee. Whatever the agreement that takes place between the consignor and the consignee is called consignment. So, consignment is an agreement between the consignor and the consignee. Consignee's duty is to sell the goods on behalf of the consignor at the risk of the consignor. This is important. On behalf of the consignor at the risk of the consignor for a compensation is called commission. Who sell the goods? Who sends the goods? Consignor. Who sell the goods is the consignee. More than the cost price, he will get the commission. Then the commission depends upon the agreement between the two parties, consignor and the consignee. Hope you understand. Who is the consignor is the owner. Who is the consignee is the agent. Whatever agreement that takes place, agreement between consignor and consignee is called consignment. So, whatever agreement between the consignor and consignee is called consignment account. So, consignor is the owner, consignee is the agent. whatever the agreement that takes place between the consignor and the consignee, we call this as consignment. Now, meaning, it is a system of sending the goods to consignee for sale of goods to the customer on behalf of commission. So, who will sell the goods now? It is a system of sending the goods. Who sends the goods? Consignor for sale of goods to the customer on behalf of commission. So, consignor, owner, the person who sends the goods to the agent to be sold by him on commission basis is called the consignor. So, he will sell the goods on behalf of the owner for a commission. Who is consignee? Agent who sell the goods on behalf of the owner consignor for a compensation is called commission. So, commission, it is a consideration to the agent for sale of goods on behalf of the owner. He will get the compensation. That compensation we called as commission. So, types of commission. There are 3 types of commission. One is called ordinary commission. Number 2, Dilkridar commission. Number 3, overriding commission. Which are the commissions are? Ordinary commission, Dilkridar commission, overriding commission. Now, I am going to explain one by one. Ordinary commission. It's a type of commission given by the consignor to the consignee for selling of goods on behalf of consignor. It is on cash and trade sale. So, whatever the cash sale, whatever the credit sale, he will sell the goods. It may be on cash, it may be on trade. For that, he will get a compensation. That compensation is called ordinary commission. Then, Dilkridar commission. It's a type of commission paid by consignor for increase the sale and to encourage to the consignee for selling of goods on behalf of the consignor. It is an extra commission payable by consignor to consignee if there is only a loss of bad debt due to credit sale should be held by consignee, not by consignor. Generally, the risk goes in favor of the consignor when Dilkridar commission is paid. If there is any loss because of the credit sale, if there is any bad debt arises due to credit sale, that loss of bad debt should be borne by consignee, not by consignor. In regular cases, if there is any loss, the loss will be borne by consignor. But here, when the Dilkridar commission, when the extra commission is payable by the consignor to the consignee, if there is any bad debt arises, that bad debt should be borne by consignee, not by consignor. I will repeat. Generally, when the goods are sold, if there is any loss, that will be met by consignor as per the agreement. But if the goods are sold on what's called credit basis, if any extra commission is payable, called the Dilkridar commission is paid, more than ordinary commission, it's an extra commission payable by the consignor to the consignee. When this commission is paid, if there is any bad debt due to credit sale, bad debt loss should be borne by consignee, not by consignor. This is a very good point. Generally, if there is a loss, that loss will bear by consignor. But when Dilkridar commission is paid, if there is any loss, like a bad debt arises due to credit sale, that loss should bear by consignee, not by consignor. This is a very important point. So, it's an extra commission. So, more responsibility goes to consignee. Then, overriding commission. It is an extra commission allowed by the consignor to the consignee. Extra commission given by the consignor to consignee to promote sale. To promote the sale at higher price than the specified, to encourage the consignee to sell the goods at a higher price than the cost price, put hard work in introducing a new product in the market. This is important. So he has to take the hard work. So he will get the compensation definitely because of the hard work. So it is nothing but an encouragement given by the consignor to consignee to make more sale, to work hard and get the compensation. That is called commission. Then come back to a new word called pro forma invoice. Price or pro forma invoice. It is an invoice prepared by the consignor at the time of goods sent to the consignee. It is not a true invoice. It is preliminary bill of sale. It's a preliminary bill of sale. So this is a format. Pro forma invoice, Ramesh Book Center, Mysore, number radio to Vasavi Book Center, City Bus Stand, Bangalore. What are the things you are sending? Serial number 1 and 2, particular quantity, rate, amount. So they are sending how much? Financial accounting, 100 quantity, each cost 50, 5,000. Statistics, 100, 66,000, total 11,000. E and me expected, and whatever the error comes, they have to mention here. Then Ramesh Book Center signature. So this is just like a not an invoice, it's a pro forma invoice. Here errors are expected, and if there is any omission, that can be rectified here. Hope pro forma invoice. This is the number, the date you are sending, to whom? Vasavi Book Center, City Bus Stand, Bangalore. So Ramesh Book Center is sending this, and we are just like there. If they accept that, the same type of books will be sent by whom? Ramesh Book Center to Vasavi Book Center. Pro forma of here, gross sale. This is account sales. Accounts. This is an account sale sent by consignee to consignor. It contain account sale, contain gross account sales, contain gross sales made by consignee, less expenses of the consignee, unloading charges, selling expenses, commission, the balance. Whatever the advance given by the consignee to consignor will be deducted. The balance will be sent by check or draft by consignee to consignor. A to Z shop, Mysuru, signature of the consignor. Who made this? No, consignee to consignor. After the sale, he will send the detail of the sale, how much it has been sold, what are the expenditure of the consignee, what are the commission of the consignee. So the balance will be sent by consignee to consignor in the form of a check or a draft. So what's the format? Total gross sales, less expense of the consignee, unloading charges. This is one example. Whatever the expenditure made by the consignee, unloading charges, selling expenses, commission, amount, whatever the advance given by the consignee will be deducted, balance due. It can be sent by consignee to consignor in the form of check or a draft. A to Z shop, Mysuru 31-3, signature of the consignee. So this is generally they will ask. So this is nothing but full information about the sale sent by consignee to consignor, saying whatever the goods have been sold, at what price had been sold, what are the expenses of the consignee, how much advance I have given, I have deducted. The balance will be sent by consignee to consignor in the form of a check or a draft. So this is a format of account sales. Sales made by consignee, it is called account sale. Total gross sale, less expense of the consignee, less commission of the consignee will be deducted, the balance, and whatever the advance given by consignee to consignor will be deducted. The balance will be sent by consignee to consignor in the form of check or a draft. What is consignment? It is an agreement between the consignor and the consignee. So consignor will send the goods to consignee. Consignee will sell the goods on behalf of the consignor at the risk of the consignor. So this is a regular transaction. So there is one word come regarding the deal credit commission. It's an extra commission payable by the consignor to consignee. When this commission is paid, if there is a bad debt because of the sale, that bad debt loss should bear by consignee, not by consignor. I will repeat. If there is a bad debt loss, that should be bear by consignee, not by consignor. Regularly, if there is any loss, they should be bear by consignor. What's agreement takes? He will sell the goods on behalf of the consignor at the risk of the consignor. I will repeat. Consignee will sell the goods on behalf of the consignor at the risk of the consignor. But when delivery or commission is paid, if there is any loss because of bad debt, how the bad debt arises? Because the credit say that loss should bear by consignee, not by consignor. That loss should bear by consignee, not by consignor. So this is a very good point, and he will send the details of account sale, making how much sale has been taken, what are the expenditure of the consignee, what are the commission of the consignee, how much advance I have given or deducted. The balance will be sent by consignee to consignor. Hope you understand. We'll meet in the next session with some more example. Then we'll go to problem. Till then, goodbye. Meet in the next session.